All right, good morning, everybody. Welcome to today's bi-weekly podcast. We are grateful that you are spending time with us today. So we appreciate you taking a half hour out of your morning to spend with us to talk about some timely topics today. The topic today is the new retirement mindset. What has changed in the last 5 years? So we'll go with that. We have a great panel of our advisors today. We're going to go through some different topics on what has changed. We have Zach DeBoer, Michael Birschbach, Mike Mann, and then we also have Lauren Frecka that is going to give us the Gentian happenings later on the podcast today. So hopefully you all feel okay. Yesterday was St. Patrick's Day. We hope you had a great time celebrating St. Patrick's Day, whatever your traditions are. Maybe you had a Reuben, maybe you had a Rachel, and maybe you didn't have anything at all. Maybe you had something else. But it's funny because St. Patrick's Day, when you look at like some of the facts and like how it all originated, the actual original color was blue, not green, and it used to be a dry holiday, and that is probably the opposite of what how Americans celebrate St. Patrick's Day today. So. Also, corned beef, the Reuben sandwiches, that's very Americanized, very American tradition. It used to be bacon and cabbage is how they used to celebrate St. Patrick's Day. So it's funny to see how things change, how things morph, and that's retirement as well. A lot of people, you talk about, oh, this isn't your grandfather's retirement anymore. You've heard those sayings before. Today, we're going to talk about what has changed. What are some of the trends we're seeing right now as far as how people are thinking about retirement? What are some of the decisions that need to be made around retirement? Is it a full retirement? Do you just cross a finish line and say, "Oh, it's all leisure now"? What's been happening, and what are some of the things that we're seeing our clients talk to us about, and so we can share it with you as well. So it'll be a fun segment today. Lots of good information. We have some of the leading advisors here. We're going to talk about it. So going big real quickly. Grateful for enhancement in relationships. So I had a couple stressed relationships, friends and family, and through the teachings, through always getting better, through being able to have better conversations with people, I've actually seen some improvement in some of the relationships in my life. So all pretty fun. So today I'll talk a little bit about quick to listen, slow to speak. You've heard that before. There's a lot of good learning in that. Is the whole idea of quick to listen, slow to speak. How often have we jumped into a conversation and we cut someone off mid sentence? How often I've done it? Like someone starts saying something, and you know that you right away don't agree, or just you don't agree with it, or you have a different feeling on something like that. You jump in mid sentence, cut them off, and all of a sudden now you have a stress type of situation going on. But maybe if we're quick to listen, seek some understanding, maybe it might be a little different. So, anyways, we're going to talk about retirement planning today, what's changed in the last 5 years as far as mindset goes, and then we'll go from there. So, does anybody want to go big? Zach or Michael? Mike, you want to go big?
Yeah, I'll quick share just very briefly. Just grateful for the opportunity to celebrate my dad's birthday today here with us for the March birthday lunch. His birthday was yesterday for St. Patty's Day. So, as I've mentioned many times before, my parents are extremely important to me, and spending time with them when we can is important. And today they're coming here to the office, so very excited to spend time with them.
Oh, very good. Well, happy birthday to your dad. Can't wait to spend some time with him and hear some stories for sure today over the lunch hour. So, anybody else? Michael, Mike, Lauren?
Yeah, thank you, Ken. Believe it or not, I'm actually grateful for the annual pump fake, as I call it, the 70-degree day followed by another foot of snow. So obviously very frustrating for all of us who are looking forward to some nicer weather, but it's a nice humbling reminder that I fall for that same trick every year, and just to continue to practice patience. So grateful for that today.
Yeah, it is truly a head fake. I think we're all ready for some warmer weather and 30 inches of snow in some places I heard as well. So pretty remarkable. A lot. People had to get, plowed out to get their plow out, if that made sense. Mike, how about yourself?
Cool. I was grateful to be in DC this last weekend and not in Wisconsin for that exact reason. So, but in all seriousness, well, that was kind of serious, but March Madness coming up here. I always really enjoy that, having the TV on and watching some basketball. I don't pay attention to a lot of college basketball, but it's always fun. I'll be rooting for the underdogs as always. So,
Yeah,
and the
there you go.
Badgers, of course. The Badgers got the that 5 seed, so that's a pretty big risk when it comes to those 5 versus 12s. You never really know what those more unknown teams might be bringing to the table.
It's
But
it's so true.
anyways,
So true, Mike. Those 12-5 upsets, you never know. You got to pick one of them somewhere in the bracket, which one it's going to be. Hopefully
it
not
won't be
Wisconsin.
Wisconsin.
Not
So,
Wisconsin this year, right? Not Wisconsin. Go Badgers, right? Go
yeah.
Badgers. So, Lauren, how about yourself?
Yeah, Mike, that was my gratitude as well. I look forward to March Madness every year. I think it's a great way to have a friendly competition amongst your friends or the team here. And I don't know, I have a good feeling about my bracket this year. We'll see how we feel in a couple weeks, but crossing my fingers, and it's a great way to get through these last few weeks of winter.
Lauren, that's great. That's great. So yeah, the bracketology, March Madness tradition. We talk about traditions. We talk about your traditions. What you do with your families for March Madness at the Flannery family. We have a big trophy, and we put people's names on it. Whoever wins. So I've won it last 2 years in a row. I'm going to ease up a little bit. Maybe let the kids win a little bit here. So give them some confidence in the whole bracketology and March Madness. So good luck to you and your brackets. Hope you have a good one. So. Let's start off with some markets. Mike, would you like to talk a little bit about the markets, what's going on, what maybe,
Sure.
well, what the Fed is doing, maybe your diversified portfolios?
Yeah, we can chat a little bit about that and some of the more interesting things that have been transpiring recently with, global politics and everything going on in the world is that a little bit different of an expectation with interest rates. The squeeze on oil, some different things happening has brought this anticipation that maybe it's now going to be longer Fed pauses than lowering interest rates quicker. That's why we can never bet upon what's going to happen with anything. We always say that we don't have a crystal ball because there's nothing more true than that statement because you never know what that unforeseen event could be and how that might affect things. And that's a great segue into what we've kind of experienced the last 5 years. And if we want to talk about markets a little bit in that regard, truly the diversified strategy that has been put into place is a timeless investment type that doesn't need changes over time. It's a strategy. It's not considered a specific portfolio. Pieces of that strategy, which build the portfolio itself, those change over time, right? We make some decisions based on certain mutual funds, how they work within their peers, but generally speaking, that allocation that we put together is completely timeless, as evidenced by a really great story that actually Chris tells before when he originally put together a lot of these based on some of the founding aspects from Nobel Prize winning theories, things like that, modern portfolio theory, Eugene Fama, all that good stuff that I won't bore everybody about that we enjoy so much. Anyways, he sat down and with a group of individuals put together a perfectly optimized portfolio years ago, but all it did was work off of trailing returns. And so, guess what that portfolio said they should be invested in? Well, that was supposed to be about 70% small cap value, 30% international, right? And I think in between the lines there, a little bit of real estate that blends between that international and small cap value. If you would have taken that approach, you would have missed all of the last 15 years of large cap growth, just outperforming everything, right? It's just been an absolute blowout in that comparison. There's been a couple of years of lagging behind where we've seen things in different ways, but that's why we want to structure a portfolio that we own a little bit of everything, right? We're not swinging for the fence in retirement. We want to make sure that we have exposure to those investments that give us that opportunity to capture as much upside as possible, but we also need a little bit of protection on the other side of it. So that comes back to this diversified portfolio approach. Now, it's wonderful to see within the last year or two, we've also seen international. International reached a point of being undervalued in comparison to domestic equities that we really haven't seen. And so that's something that's transpired. And guess what? It was able to capture the growth of those international positions, that diversified portfolio. So despite the changing geopolitical climate, despite everything else going on, the biggest thing that's changed over the last 5 years with retirees, and everybody else is going to touch on this, is going to be mindset, the technology, how fast we're receiving information, all of that stuff. Markets are going to continue to do things that are unexpected to us, but we're going to expect the unexpected, continue forward with our diversified approach, make small tweaks here and there, but generally speaking, the strategies are built for this. That hasn't changed over the last 5 years. Thanks, Ken.
Mike, thank you very much. That's well said. We appreciate your insight to the timeless and the evergreen pieces that we build for you that are watching this here. So, Mike, thanks for reiterating some of those timeless principles. We do appreciate that. Faith, patience, and discipline, my friends, that is really the thing that takes us the distance in all this. There are two things that can really screw up a retirement plan, as you probably can imagine. Number one is selling low instead of buying low. You know the strategy, buy low, sell high. The idea of selling low can really thwart a retirement plan very, 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 very quickly. So you've been great investors. We applaud you for being great investors. We haven't seen that for a long time with our clients in that regard. So again, in overspending, we're going to talk a little bit about spending trends. We're going to talk about what people are spending money on that we're seeing right now as far as experiences and families. Maybe Zach will touch on this or Michael. But we're seeing that it's a really key piece to spending right now because the markets have been great for 15 or 16 years. The last 3 years have been incredible, right? Recently, the last couple of weeks, we've seen a little bit of a downturn. You all pick up on that when that happens. We know that. We're aware of that. That's the timeless piece that Mike is talking about, and the strategy will take you the distance, right? But when you talk about spending, some of us have been spending a little bit more than maybe we should or need to at certain times because the times have been good, or we wanted to upgrade this, or we wanted to change this, or a new vehicle, a new experience, a new travel with the family. We have to be really careful when the markets get tough on us. We have to be careful about reeling in our spending. It's a really key piece to all this. And if we're spending 6 and 7%, which is too much to begin with, by the way, on an annual basis, that's going to look like 9 and 10%. It's too much. We have a really high chance of running out of money at that point in time. So if we stay within our safe guide rails, we typically talk about the 4% rule, 4% spending on an annual basis of your overall bucket of money. That's a really tried and true tested place to be for spending. But again, just want to keep those two pieces in mind. Selling low and overspending are two of the key factors of thwarting a very successful retirement going forward. So, Zach's facts. Would you like to talk to us, Zach, please?
Yeah, thank you, Ken. I'll go into a little bit more detail on what Mike shared of just where markets are at here as of this morning. So markets have actually been unbelievably resilient with all the uncertainty with Iran, interest rates, all the things that Mike mentioned. So the Dow Jones just down just slightly over 2% for the year. The S&P is actually only 1.89% temporarily down. The NASDAQ just over 3, which is heavily weighted towards technology. Russell 2000, those smaller size companies, about 1.5% positive. Emerging markets, almost 6.5% positive on the year, and international 1.74. So it goes back to Mike's point of a diversified strategy and how important that is, especially in retirement and producing income to live off of, that having different asset classes outperforming at different times really makes rebalancing and asset allocation just a wonderful strategy. So that's where things are at for the year. And a few mindset shifts. This is one of our favorite topics to walk through. 2 weeks ago during our last webinar, we talked about the psychology of markets. And really, it's very simple, but not easy, which is what Ken mentioned, is just don't sell at a bad time. Really, that's really how we get through those. But when it comes to the psychology and the mindsets of retirement, it's a lot more dynamic because it's specific to you and your family and what your definition of what bringing the most meaning and joy to your life is. And one thing we've really seen pre-COVID and post-COVID when it comes to retirement is a slightly less view of viewing retirement as a finish line. That really pre-COVID, and this is a very generalized statement, not necessarily the people we've committed to, because these are conversations that we've had for many, many years now. But pre-COVID, as a society, generally speaking, it was kind of work, retire, slow down, preserve assets. That was really just a very general statement with it. But post-COVID, whether it was the potential loss of friends or family members, it was a lot more focused on mortality and bringing the most meaning and joy to our lives from here on out, and focusing more on life design. And I had one of our long-term clients describe it to me recently, who's about to retire, and had it really resonate with him, is that retirement's really about buying time so you can spend it where you really want to, instead of where you're forced through work or other places as well. And along with that, with the purpose side, we've seen more And it could be with the last 3 years of extremely good markets, seeing higher balances, a little more comfortability with taking a little bit more money out here and there. We've seen a much larger push towards accumulating experiences with our loved ones on an annual basis, or setting up plans for an experience fund or a family travel fund, where instead of accumulating a bunch of money and it passing to them someday at some point, there's been a higher emphasis on how do we enjoy this with them now? Or instead of pushing this 10, 20, 30 years down the road, Lord willing, that if they're trying to buy a home, maybe helping them with a down payment or helping off with some of those student loans, that there's been a much higher emphasis on how do we make the most of these dollars now and enjoy it with our loved ones right now. So those are two high points. I have a bunch of others, but that's really one of the biggest mindset shifts we've seen over the last 5 years, and one that we're extremely excited about, because bringing the most meaning and joy to your life is the most important thing to us as being your guide for retirement. So that, Ken, I'll pass it back to you.
Thank you, Zach. Really appreciate that insight on experiences and family experiences. Definitely seeing quite a bit of that right now as well. So yeah, we definitely appreciate that. So experiences come, people that's the leisure side of things. That's some of the purpose. People love structure. People love purpose. People love social engagement. So we're starting to see this idea of just like, if you retire, that's it. Not really. It's more of a transition period rather than like a finish line, like Zach is saying, right? So it's more about volunteering. Like we hear a lot of stories from you about volunteering. That doesn't have to be money all the time. It could be your time, your energy, your resources. We talk about that quite a bit, and you talk to us about that quite a bit. So, whatever your passions are, whether it's animals or helping elderly people or help, just whatever passions you have, we're starting to see more people do more of that. So it's really great to see the helping hand in the world. Leaving it a little better than we found it is the idea there. So we certainly do appreciate you and how you share your lives with us. We do appreciate that. So Michael Birschbach, how about yourself? What are you seeing in the retirement planning right now?
Yeah, thank you, Ken. When I thought about the last 5 years, I tried, like Zach, to narrow it down to just a few points. But one thing I guess I'll compliment most of the people on this call and people we work with, but I think investor education has increased a lot over the last 5 years. More people that we meet with, whether they are near retirement, whether they're just starting off in their careers, more people seem to understand a lot of kind of the basics of investing, diversifying your portfolio, starting early to accumulate more money along the way instead of trying to save more later on. So just a lot of principles like that that aren't necessarily at the front of education for a lot of people growing up. But I think more people also understand the complexity of retirement as it really relates to tax planning, health insurance planning, estate planning, insurance planning. Notice I didn't even mention income and investment planning. So retirement is more than just money at this point in time. When I look at the industry over the last 5, 6 years, I think one of the bigger changes we've seen on the retail side of investing, so people that like to purchase their own stocks, options, ETFs, is zero commission trading. In 2019, I remember sitting in Westlake, Texas at my former employer when the company announced that they were removing all trading commissions for their retail investors. I watched our main competitors' stock price get cut in half. And then later that year, we saw massive consolidation in the industry, a lot of bigger companies, bigger brokers buying smaller brokers, with a lot of those mergers happening over the last 3 or 4 years. To build off of what Zach said a little bit, spending changes, obviously costs of mostly everything has gone up. In turn with that, we've seen a lot of good markets, good returns, and good growth on a lot of the investments. And I think a big change is that a lot of people are spending money on experiences during life versus leaving a large inheritance down the road. I think one point that hits home with me is that just based on when people have children and their ages at the point where they start to retire and how old their children are, they're in a lot of the earlier years of their career, maybe have a younger family. So the opportunity to help them at that point in time typically carries a lot more weight than waiting, 20, 30 years down the road. So if that's something that is of interest to you, please talk to us. I think it's a really valuable thing to go over as you look at family wealth planning. One thing that hasn't changed, the patient, disciplined investors continue to thrive over the last 5 years and many more. And crafting a plan, sticking to it, and ignoring all of the noise that we see on a day-to-day basis in the markets is just going to help you continue to win. Back to you, Ken.
Thank you, Michael. We appreciate your insight on that piece as well. When you look at retirement, things you've also said to us and things we hear that's going on right now is healthcare is a big deal, of course. The idea of where will I live is a big deal, of course. At a certain point in time in your life, you start to reevaluate decisions like that. That's a big mindset shift. I got to be careful on how I said that. Holy cow, that didn't come out correctly, right? But that's a shift there as well, right? So we're also seeing more of like psychological goals. So meaning like, they've changed. Volunteering, I just mentioned that before. Learning new skills. Holy cow, I've heard so many stories about retirees learning new skills. Oh, they always wanted to learn about music or woodworking or something in your life that you always wanted to know more about. Maybe look at the family history a little bit more, the genealogy of things, right? I've also heard clients actually taking college classes. A lot of times you see people that are retired. I think, maybe it's an age with certain universities, but if you're a certain age, you actually can go take college classes, and usually they're free. I can't say that across the board, but I've heard a couple universities and well respected universities offer free education, free classes to retirees. I think maybe 65 or older or something like that. So if that's something of interest, if you always want to learn about something or dive deeper into something you already know, or see what the latest is on that topic, look into your local university or local colleges to see what's available there if you're interested in learning some new skills. More of a lifestyle design today as well. What sort of lifestyle do I want? And that's really by design and by choice many times. So that's what we're seeing in the retiree area there as well. So, but the idea of needing care along the way, we talk about family experiences, we talk about your money, you talk about your money, what's needed, how much are we willing to spend, if you will, but also juggle this idea of maybe needing care at some point in time in our lives as well. That's always a balancing act that we see. We want to have fun with it. We want to enjoy it. We also want to make sure that we're not a burden on anybody else. That's a really big trend that we're seeing there as well, as far as family members and things of that nature. So I'll pause there for a second. I'd like to bring Lauren on, please. Lauren, can you tell us what is happening here at Gentian? There is usually not a shortage of events that we have to offer.
Yeah, thanks, Ken. We definitely do not have a shortage coming up in the next few weeks here. As Zach mentioned, today we have our March birthday club, and we always look forward to celebrating your birthday. So if you have a birthday in April, I'll mention that date coming up here, but definitely RSVP for that lunch. And then beginning March 25th, we have our Ladies and Gentian. The topic of this one is staying one step ahead of scams targeting women. And we have the VP of supervision at Raymond James joining us for this. So definitely will be some great information there that you won't want to miss. Then the next day, Thursday, March 26th, is our spring technology update. This is at Blue Mountain Country Club, beginning at 9:30 in the morning. If you haven't registered for that event yet, please do. That's another great event here. And then Wednesday, April 1st, is our next biweekly podcast. The topic of that is the quiet power of organization, simplifying your financial life. And then just a reminder, on Friday, April 3rd, our office will be closed for Good Friday. And then Wednesday, April 8th, we have our health and wealth webinar with Michelle Norris. These I always look forward to as well. This topic is called Eat the Rainbow, so definitely should be an interesting one there. Wednesday, April 15th is another podcast coming up. That one is on what your tax return is trying to tell you. And then our April birthday club is going to be on the 22nd. So again, all of these are available to register either in our happenings email or on our website. And that is all I have for you today. Back to you, Ken.
Lauren, thank you very much. Appreciate the updates here at Gentian. We love spending time with you. So if you could make a couple of those, we'd really like to see you there. The technology update that's happening that Lauren mentioned at Blue Mountain coming up here, give some serious thought to that. Chris just spent a nice amount of time, 3 or 4 full days with the foremost thinkers and futurists in the world. And that is a really important topic, technology update. So if you've been to those before, if you've heard Chris give us some downloads on what's happening with artificial intelligence that we talked about like 6 or 7 years ago, and here it is today, ready? All right. So, the idea of like that sort of stuff. And there's probably so much more. We haven't even heard the download yet. So we're excited to hear what Chris learned over the last 4 days in being with some of the top thinkers in the world. So if you have not signed up for the technology update at Blue Mountain, please do. It is tremendous. You'll learn a lot. It'll kind of freak you out a little bit, but it also will give you some comfort to say, you know what? Change is inevitable. How do we change with this? How do we stay in the game, if you will, rather than just being removed? Like for example, my dad doesn't even have a cell phone. That's by choice. Maybe that's a good thing. Maybe it's not. I don't know. But if we want to stay up on things, if we want to participate with our kids, talk to some of the same language as our grandkids, this is their life. This is their life. Whether it's right or wrong, it's really happening. So again, if you can make it to the technology update next week, oh my gosh, I don't believe you'd be disappointed. So come have a lunch with us, come spend some time with us, and let Chris kind of indulge you with some of the things that he's learned with the best thinkers in the world. So with that being said, we want to thank you very much for your time today. We appreciate you. We appreciate what you share with us. We appreciate your trust and confidence, your friendship, the introductions that you give to us from your family and friends, people you care about. We truly appreciate all that. So thank you very much. And from the Galactic headquarters here in Mequon, Wisconsin, we want to thank you very much. And you have yourself a beautiful day. Take care. Bye-bye.